Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Tuesday, June 11th, 2013. Well, a change of trend to the downside today in a candle that's made a lower high and a lower low. Previous day's trading we had a small spinning top type candle at the end of this first time frame uptrend, and it did set the market up for a potential change of trend, which is what we've seen for today's trading. The spinning top is a candle of indecision, and at the end of a trend it's not a candle that gives you a lot of confidence in the possibility of that trend continuing. So therefore, for the previous day's trading we were on the lookout for a potential lower high and lower low, and that's what we've seen today, confirmation of that change of trend to the downside. A fairly large black-bodied candle today, denoting the sellers making a substantial amount of net bearish progress. So here we've seen in this prior downtrend at the towards the middle and the end of the trend, we saw some decent selling coming in. The buyers attempted to rally this market, didn't really manage to close the market past the previous swing high. We saw this indecisive trading as the market tested up above there, and today now we've seen the sellers come back into this market, with the sellers taking control of this market and showing some strong commitment to taking this market lower. For two trading periods ago, we saw a small window develop, and windows in terms of candlesticks are areas of support and resistance, and in this case has provided support for this market. And this window hasn't been closed, the market hasn't traded all the way through the window, so the window is still quite active. We can see this small amount of price rejection from this area. Having said that, however, on a trading day where the sellers have closed with very strong control, it does raise some doubt about whether this area will be able to hold as solid support for tomorrow's trading. The sellers seem to have gained some decent momentum, and it does suggest that there is a possibility of the market trading to lower levels. But what we really do need to watch is how the market reacts to this window early in tomorrow's trading. If we do see solid bearish activity down below the window that extends from the high here at 1622.56, then we could quickly see the market testing down to the round number 1600. Now the round number 1600 should provide very solid support, and we saw this strong price rejection here 4 trading periods ago, so that is a crucial area for this market. To the upside, obviously this zone extending up to around the 1650 level, we saw the market testing down there, and it was in a zone was holding as support down to 1636, and for yesterday's trading we tested up to within that zone and we're rejected from there today, so very solid resistance overhead. Now in terms of the Fibonacci extension, we're examining the relationship of the first time frame downtrend to the previous time the market was trending down, and here today we've seen the market take out the 38.2% level but be rejected from the 50% level, and that coincides with this area around the window that was opened. A window in bar chart terms is basically a gap, so the same thing, and here we call them windows with candlesticks, but we see this price rejection from there and it strengthens the support around that window, so we do need to watch the area very, very closely. And in terms of the Fibonacci retracement, we have had the market trading to the 50% level and being rejected from there, coinciding with the window obviously, and it does raise some doubt. So with the two Fibonacci techniques and the window suggesting that there could be some strong support around this area, it makes it very, very important that we do watch how the market reacts there early tomorrow morning. Now in terms of Ichimoku, obviously a bullish market in the long-term time frame. The market has been bullish for quite some time, and the market was looking a little bit overextended, and if we look here we see how the market, when it gets overextended, it tends to retrace back towards the equilibrium offered by the cloud, and here once again overextended and retracing back up towards the cloud, so we could once again see the market bounce off and test to higher levels. The thing here with the support that's offered by the cloud, it is dynamic, and here as we move into the next week or so we are going to see the area of the cloud actually move higher, so it will be meeting where the market's trading if the market doesn't trade down, so it will provide a solid platform for this market in the coming week or two. One problem here, however, is that the width, the depth of that cloud will be lessening as we move into the future. So the amount of potential support will be weakening. So that's a bit of a trade-off for the cloud moving up to find support at the around the price action here. In terms of the Kijun-sen, the pink line here, we have the market now trading down below there. Previously we had a bearish breakout down below testing to 1600, and once again today similar scenario to this, trading down below the Kijun-sen, suggesting that the market is bearish in the medium-term time frame combined with a bullish market in the longer-term time frame, and it does suggest a possibility of the market testing back down to the 1600 level. And also we now have the market bearish in the short-term time frame by trading below the Tenkan-sen, and we saw the market trading up above there and then the Tenkan-sen holding as resistance prior to that. Bullish breakout did suggest that the market could have traded to higher levels. We saw the indecision come into this market, now trading back down below there. So it really does say something about the lack of strength of the buyers in that short-term time frame at the moment, and does suggest potential for lower prices. The only problem here is, however, that we do have that strong resistance overhead in that zone, so the area extending up to 1650 may hold as very strong resistance, but strong support immediately below where the market's trading with the window and the Fibonacci ratios, but then certainly down to 1600, very, very solid support around there.